Hello. This would now be our fourth video for our discussion on the conceptual framework. The content of this video would be the first part of our discussion on Chapter 2, which is the qualitative characteristics of useful financial information. Before starting our discussion on Chapter 2, I'd like to mention once more that Chapter 2 is a rich source of questions during examinations. The reason being, Chapter 2 introduces a lot of new terminologies that can easily be asked as a multiple choice question. The question will just indicate the definition of the terms, and your choices would be different terminologies. And the task of the student is to simply choose the word that is being described in the question. And as a warning, if you're just a new accounting student, this is your first year in college, one of your first subjects would be your conceptual framework and accounting standards. And let's say you are not the type of student that is fond of studying. So here comes your first exam, and the coverage of your first exam is the first four chapters of the framework. And you decided, since it is still the first exam, might as well not study yet. Perhaps I really don't have to study. Then on the day of the exam, you were able to encounter very easy questions. The questions would only provide a definition, and all that is asked from you is to identify what word or terminology is being described by the question. If you're a student that is good in vocabulary, then you would certainly be able to answer some questions. So during the exam, you would say, I can still answer questions even if I did not study anything. So perhaps I can finish accounting without studying at all. So you would develop a false sense of confidence that you can actually survive accounting without giving an effort. So as early as now, I'd like to warn students that perhaps because of Chapter 2, your first examinations in accounting may have extremely easy questions that can be answered even without studying, so long as you have good understanding of the English language. But please do not think that that is all that you need in accounting. You really have to exert effort for you to finish the course. So hopefully you would not develop any false sense of security in your ability just because you did well in your first exam. Or you don't even have to actually do well in your first exam. Let's say, for example, you only got 50%. Then you would say, 50% is good considering that I did not study. But then again, if you actually study, it's not a guarantee that you will exponentially increase your scores. So always give your effort. So we will begin with Chapter 2. As I have mentioned, we will be dealing with terminologies that for sure you have already encountered before. Our goal now is to understand these words in the context of accounting. But definitely, their definition would still be their traditional definition. But for us to deepen our understanding, we have to understand the context in which it is being used in accounting. So again, Chapter 2 is about qualitative characteristics. There are two groups of qualitative characteristics that are mentioned in the framework, and they are your fundamental qualitative characteristics and your enhancing qualitative characteristics. So under your fundamental qualitative characteristics, you have relevance and faithful representation. While under your enhancing qualitative characteristics, you have verifiability, comparability, understandability, and timeliness. For our enhancing qualitative characteristics, this would be asked as a very easy question. The question would go like this: which of the following is not a qualitative characteristics? So what does that require from you? It only requires from you to remember what your enhancing qualitative characteristics are. And again, these are verifiability, comparability, understandability, and timeliness. To remember these four, I have come up with a mnemonic. You just have to remember VCAT. So your enhancing qualitative characteristics are your VCAT. I don't care if you've heard of that mnemonic before from other sources. I came up with that mnemonic on my own when I was still a student. Before we continue any further, I think it's important for us to understand the purpose of these qualitative characteristics. So basically, your fundamental qualitative characteristics are your mandatory qualities for a useful information. We do not consider an information to be useful if it is not relevant and if it does not faithfully represent what it purports to represent. So very important thing to remember here is that an information to be useful must possess both relevance and faithful representation. we do not consider it as a useful information if it only possesses relevance. And in the same manner, we do not consider it as useful if it only faithfully represents what it purports to represent, but it is not relevant. And that should be understandable. Information must faithfully represent the economic phenomenon that it purports to represent. And at the same time, it should be relevant. Otherwise, there's no point of presenting that information because it will not help our financial statement users. So please take note of that one. This could be an area that will be used by your examiners. They can use this one to make you confused. Is relevance enough? Is faithful representation enough? The answer is no. Both must be present. Information is only useful if it is both relevant and if it faithfully represents the transactions that it purports to represent. Now, what then do our enhancing qualitative characteristics perform? Should an information have these four enhancing qualitative characteristics for them to be considered as useful? The answer is no. As long as you have the fundamental qualitative characteristics, then that information would be considered as useful. So what then is the value of our enhancing qualitative characteristics? From the term itself, it simply enhances the information. So if in the first place it is not considered as useful because it is not relevant nor does it faithfully represent what it purports to represent, then no matter how much of the enhancing qualitative characteristics it possesses, then such information will not be considered as useful. No amount of enhancing qualitative characteristic can elevate an information as being useful if relevance and faithful representation are not present. So to answer the question as to what function our enhancing qualitative characteristics perform, aside from enhancing information that possesses already the fundamental qualitative characteristics, the enhancing qualitative characteristics help financial statement users to choose between two useful information. So if two information are useful, meaning two sets of information are relevant and faithfully represents the transactions that should be reported, then to choose between the two, you determine which of the two sets of information possesses your enhancing qualitative characteristics. Now, if we are being honest, especially once you move further in your study of accounting, you would actually realize that the terminologies in Chapter 2 are not really that helpful when you study financial accounting. Because when you are already studying financial accounting proper, then you will already be following strictly the standards. You do not have to keep on checking whether an information is relevant, whether it faithfully represents a transaction, or whether it possesses your enhancing qualitative characteristics. And that is the case because the board makes sure that the provisions in our standards result in information that possess already your fundamental qualitative characteristics. And the standards also make sure that the choices or judgments you make take into account the enhancing qualitative characteristics. If we recall the purpose of the conceptual framework, we will be reminded that the framework is there to assist the IASB, assist the preparers of the financial statements, and assist the users of the financial statements. But out of the three, since we already have the standards, it would be the IASB that would have the greatest use for the framework. For our preparers of the financial statements, they will just have to simply follow the standard. They will only apply the framework suppletorily in case no specific requirement is provided in the standard. On the part of the financial statement users, they need not concern themselves with the framework because they can be confident that the information that they will get from the financial reports would be information that is relevant and one that faithfully represents what it purports to represent. And aside from that one, you can also be confident that the information that they would get from the financial reports would be verifiable, comparable, understandable, and timely. As a result of the confidence of our primary users on the value that they will get from the financial reports, they become more willing to let go of their funds and to invest it in companies that need financing. So again, out of the three entities in which the framework intends to assist, the IASB would be the one that will have greater use of the framework. Simply because for the other parties, the preparers and the users, the financial reports will be prepared based on accounting standards that were developed by the board while bearing in mind the guidelines provided in the framework.